please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
CNBC TV18 news break. The government has notified the maximum safe axle weight norms for heavy commercial vehicles. Ashwin Patil, the research analyst at LKP, he joins in on the phone line to give us his view. Hi Ashwin, thanks so much for joining in. Well, let's take two scenarios. One is that assuming it's implemented on existing fleet, and the second one that it's on new vehicles. If you could analyze both these two scenarios, what would the impact be?
The first one, as you said, on the existing vehicles, if it is implemented, as it is, we know that overloading has been there on the trucks, but it was unofficial earlier. Now it has been made official that you can overload your truck by about 25%. So that means that the demand which would be there for the new registrations would remain subdued, because the fleet operators would say that okay, my fleet is now existing and it is already capable of handling extra load. So why would I go for buying a new vehicle? So the existing fleet, since the government has said that the roads now, the infrastructure now are quite able to take that much of load, then definitely the operators will be at they will be in a sweet spot. But if it is implemented on the new vehicles, then they would be going to buy the new vehicles which would be bearing higher capacity, and that would spur demand for the truck makers. So first scenario would be negative for the truck makers, and the second would be positive.
Okay. In both these scenarios, what is your actual estimate of growth in, say, MHCV vehicles?
See, growth expectations I was having earlier, about 15 to 20% growth I was expecting for FY19, and on that high base, a slightly lower growth rate in FY20. But now, in first case, I think the growth would be impacted by about 4 to 5%, and second case would remain, the earlier assumptions which would I was assuming.
Okay, all right. What about stock picks? Ashwin, yesterday we saw a sharp downtick on Ashok Leyland. Now that stock is bounced back. We're waiting for the numbers. Interesting to see the margin picture out there as well. But your view on that stock?
I am positive on Ashok Leyland because I think that yes, this implementation has happened. It would be hitting the stock in the short term. But on the long term, since we analyze the stock, we continue with a buy rating. See, the results will be coming out today, and the call is tomorrow. So definitely, it is subject to what the management says. But currently, I am having a buy rating on the stock with a target close to 170 rupees.
Okay, target price, so 170 rupees. Let me come back to this whole overloading ban, etc. The overloading ban was already in place in states like Madhya Pradesh, Rajasthan, UP. What was the impact on the MHCV sales in these states?
See, state-wise, I don't have the exact data, but I would say that whatever demand we have seen, the spur in the demand over the past 6 months or so, about 50% of that I would attribute to this overloading ban. Now, with this, the recent statement that the government has made, I think that it would override the overloading ban thing, and if it's meant for the newer vehicles, then still it can exist. But if it's for the existing vehicles, then definitely the overloading ban would get overridden.
Okay, all right, Ashwin, before we let you go, what's the view on Tata Motors? It looked like it had value at 300, at around 10 times, 9 times. Stocks at a 52-week low. What's the outlook there? Do you think it's forming a base now? I mean, time to buy into the stock?
The stock was close to 272 levels, and it was starting to look up. But with this news coming in yesterday, the stock has gone down to about 250. But I think that the MHCV business is a small contribution in the overall pie. because JLR is the major contributor. This news should not hit the stock anymore. But the JLR positives, which would be like the new launches coming up and the hedge book loss reducing and any movement in the GBP on the positive side, that would be triggering the stock upwards. So I would maintain my buy rating on the stock with a target close to 400 rupees.
Okay, Ashwin, thank you very much for that. So negative for MHCV makers like in Ashok Leyland if the overloading rules are applicable to the existing fleet, and demand could get negatively impacted to the tune of 4 to 5%. That said, he continues to remain positive on Ashok Leyland and on Tata Motors. In fact, we'd also spoken to Ashok Leyland's MD and CEO Vinod Dasari on what this could mean for the industry. Listen in.
It is rather confusing at this point because somebody who has bought a vehicle, let's say for 25 ton, that vehicle has been designed for a GVW of 25 tons. The braking has been designed for 25 tons. If the argument that the government has that they are overloading that much anyway today, well, if they are overloading that much anyway today, then there should be no impact on vehicle volumes, because tomorrow they will say, okay, now you carry 28 tons and that would be all that you're allowed to carry, and it will be very strictly imposed. Find it a bit surprising on two reasons. One, somebody who's bought a vehicle today and somebody is going to buy a vehicle, let's say after Tuesday, what does somebody who bought a vehicle do? I mean, he has a vehicle for 25 tons. He cannot suddenly get it registered for 28 tons because the brakes and everything have been designed for 25 tons. Even in US, one-axle truck or two-axle trucks have got the difference between India and US is 16 to 18 tons. Here we are going to 19 tons, which is the world's highest. Similarly, on three-axle trucks, we are going from 25 to 28. Once again, US is only at 26, which is the highest in the world. So we are going much higher than the world. And I am not sure our roads can take something like that.
All right, let's also get in some more reactions from Pradeep Singhal, the National President of All India Transporters Welfare Association, and Vishnu Mathur, the Director General of SIAM.
We are trying to reach out to the government because some newspaper have said that it will apply only to the new vehicles, but what I don't think that is kind of practical. There are two issues to the whole notification. One is that there is a more utilization of the same asset. So because of that, what will happen is that you have more supply than the demand. You're getting more supply, and because of that, the freight rate will come down.
I think overall I would say it is a positive move because in Europe and other countries more load is permitted in the vehicles, and I think the reason why we were not permitting so much load was because the road infrastructure in India was not up to the mark. This move has been done in consultation with the Indian Road Congress, and they have accepted that we can increase the load per axle load for various kinds of vehicles. So I think overall it's basically designed, this move is designed to improve the efficiency of the road transport, and with our increasing road infrastructure, I think that is quite natural.
Somebody has to tell in the government that after this hike they have suggested, what is the rationale behind it? How have they consulted all stakeholders? Why they have not come in the public domain and discussed the whole issue? So question is, will after this revision, the overloading will become zero tolerance or not? And this, as a government, we have information. They are only depending on penalties on highways by the NHAI or under the Motor Vehicle Act.
Welcome back. It's time now to talk about market technicals. Ashwini Gujral, Rajat Bose join us on the show now. Ashwini, steady so far. Benchmark indices just higher by about 0.2, 0.3%. Your thoughts?
See, it appears that possibly the financials have some more short covering to do, and two or three of these guys which are down right now have recovered from the lows, things like IndusInd Bank, Kotak Mahindra, etc. So second half, I think you could see the bank Nifty move higher. The Nifty is also finding support repeatedly at higher and higher levels. So my sense would be that it's possible we see a rally going into the close. Longer term may or may not have significance, but I think some more short covering is definitely on the way. So we have just taken, long positions on Bank Nifty, and possibly I would think that financials could lead a market move higher in the second half of the day. Having said that, I think PSU banks are doing extremely well, more related to crude and bond yield, etc. So Union Bank is a buy with a stop of 76, target of 84. Mahindra & Mahindra is a buy with a stop of 910, target of 945. And Canara Bank is a buy with a stop of 224, target of 238.
All right, Ashwini, if someone's going on that particular call, of going ahead and buying the Nifty, stop loss, you said you should place it where?
See, a Nifty stop of 10,950 can be placed on the Bank Nifty. 26,800 stop can be placed.
Okay, all right. Thanks so much for that, Ashwini. Well, let's just get the crude oil prices. I think our ticker team had just put in a flash out there. I saw NYMEX was at around 67 odds. There's a bit of a downtake in terms of NYMEX prices. Maybe Brent as well should come up, because we saw a bit of a bounce. It went to around 71, then it was sitting above that 72 odd levels. Maybe an intraday chart. I don't know whether we can pull that up. But Brent crude prices holding it around 71.5. It's definitely better news than having it at 77.5 odd. Yep, yes, that's a perfect one. Good job by the director there. NYMEX has moved to the low point of the day. Even Brent, I think, should come up. Splendid. It's moved to the low point of the day, so that confirms that as well. So that bodes well really for the bulls. We are seeing a bit of an uptick in the markets, holding virtually at the high point of the day, 10,970. Ashwini's call is look to buy the Nifty, and if you're doing that, then the 10,950 mark should be your stop loss. Rajat, coming across to you, what's the trade on the Nifty?
I would buy. I would put a stop loss below 10,930 and buy it. My targets would be 10,997 and 11,010. This is the resistance zone. I'm expecting it to climb up to those levels. Either you buy the Nifty here or you buy close to about, say, 10,955, 957. That's your choice, but it's a buy because I'm expecting it to move up, and hence I've chosen actually 3 stocks to buy. Chennai Petrol is a buy. I would put a stop below 273.75 and target would be 283. NIIT Tech is also a buy. I would put a stop loss below 1109, 1135 and 1144. The 2 targets for NIIT Tech. And finally Just Dial with a stop below 571 I would be buying, and the targets would be 584 and 589. Disclosure has it that I personally hold some shares of Just Dial in my investment portfolio.
Okay, thank you very much, Ashwini and Rajat, for that. A quick check on the European markets. They've opened up a couple of minutes ago. Asia had a bit of a rough session, so Hang Seng's down more than about 1%. Chinese markets were down close to about 0.6, 0.7%, but Europe has opened up absolutely flat. So the CAC and the FTSE down 0.1%. The DAX is just 6 points in the green. So no real direction emerging from the European markets as of now. We'll slip into a very short break and we'll turn our attention to the big earnings which are expected today. Ashok Leyland, Zee Entertainment and Federal Bank will report Q1 numbers. The expectations on the other side.
Well, the Nifty is holding gains, but from the broader markets as well, a couple of stocks have popped up. You have Chennai Petrol that's moving higher as we speak, so keep an eye out on that stock. Volumes as well picking up. Let's get Chennai Petrol up for you on the screen. That's moving higher. And even Ramco Cements, it's seen a sharp correction from above that 800 levels all the way to around 650 odd. Seeing a bit of a bounce in today's trading session. And Federal Bank will be coming out with a set of numbers. We're waiting by for those set of numbers, but the stock has moved to the high point of the day, 4.5% higher. As we speak, we'll get you a quick preview as well of what to expect on that front. We're talking about earnings. Zee Entertainment comes out with its set of numbers. Sonal standing by. She's going to run us through the expectations. Sonal, over to you.
Thanks a lot for that, Nigel. And yes, we're expecting good set of numbers from Zee Entertainment this time around. In terms of total revenues, a growth of 15% is expected at around 1,700 crores. EBITDA also is expected to move in higher by around 30%. Margin expansion of around 350 basis points is expected. All this leading to a profit growth of around 39%. But the main number to watch out will be the ad revenue and the subscription revenue growth. Ad revenue growth is expected to be around 19 to 20%, and that is because the company has been able to gain a lot of market share in this quarter itself, sequentially as well as on a YOY basis. So that is
let's get them flashing. Okay, there you have it. The net profit is coming at 262.7, which compares with 210 a year ago. The gross NPAs have been maintained at 3%, while the net NPA has inched up very marginally, so 1.72 versus 1.69. So the asset quality has been maintained, while the company has reported a profit growth of close to about 25% on a year-on-year basis. The stock is reacting positively, at least as of now. The net profit growth is at 25%, and the asset quality seems to have been maintained on a quarter-on-quarter basis. Again, a lot depends on the internals like slippages, etc. But Abhishek is also here with us. Abhishek, your thoughts so far? Any more numbers?
I'm yet to open, but even if 3% is the gross NPA, remember that, you know, analysts are expecting a higher slippage in this quarter. So you might see 3% because the loan growth is also expected to remain robust. So I'm just looking at the numbers and I'll get back more details on the same.
Okay, all right. I think we have the NI numbers. Well, they're just flashing for you on the screen. So let's get that up for you. I think
about 980 crore. Yeah, 980 crore would be the NII figure.
Yeah. So let's get the NI number as well up for you on the screen. What was the expectation, Abhishek?
974 crores.
974. Okay, so that's more or less in line, mildly better than what we were working with. This looks like a more or less stable set of numbers. The profit numbers looking much better. We'll have to wait by 980, precisely. That's the number, you know, that we are working with. 980 crores is that number. And Abhishek's poll threw up a number of around 974 crores as well. So gross NPAs have been maintained on a sequential basis. No worsening in asset quality. The NI number a tad bit better. And in fact, I think that's why the stock is up close to around 4.5% as we speak.
Well, the provisions have come down, whether you look at it on a quarter-on-quarter basis or on a year-on-year basis. Yeah, so on a year-on-year basis, the provisions have come down from 236 crore to 199 crore. And if you look at it on a quarter-on-quarter basis, it's a significant fall in the provisions. So 371 crore versus 199 crore. So this decline in provisions also seems to be aiding this big jump in the company's reported profitability, where, as we said, the profits on a year-on-year basis are higher by close to about 25 crore. And if you look at it on a quarter-on-quarter basis, the profits are higher by nearly 80%. But bear in mind that there is a sharp fall in the company's provisions this time around. But the street seems to like at least the numbers so far which have been put out. On the NII front, it's in line with expectation. Profits are a beat compared to the CNBC TV18 poll, and the asset quality has been maintained and no deterioration there.
Yeah, Abhishek.
Well, that exactly you have summed up. You know, the asset quality is not as bad as analysts did expect, and the profits are higher than the poll. If I do a back of the envelope calculation, that is net NPA divided by net NPA ratio, the loan growth comes in at 22 to 23%. So the loan growth has tapered off from the last quarter, but it remains healthy. And despite the fact that management did mention in the con call highlights to analysts last quarter that there will be a last leg of corporate NPA recognition, even in absolute amount, the gross NPA has increased by just 2.6%, and that compares to a loan growth of in the same region of 2.5% quarter on quarter. So overall, the numbers are far better. And going into the results, yesterday the stock was at 52-week low. So valuations and the stock price actually aids the fact that the results are much better when you compare to our poll.
Okay, we've got our executive editor Lata as well joining us. Lata, you want to throw more color? The stock is running away. Yeah, the stock is running away now.
No, the executive editor is entirely on the footsteps of our expert Abhishek. The important point is Federal is not an SME, is not a retail bank. It's not like the IndusInds and the HDFC banks. It's a bank that has lent to corporate. Maybe more MSMEs, but it was part of the steel lending, part of the large lending as well. And a federal is telling you that there is no incremental GNPA. Of course, the slippages could be a little more because this lower additional gross NPA could also be because they have taken more write-offs or they have made recoveries. That's all possible. I mean, we should still be prepared and hold our horses till we see the slippages. But nevertheless, you will have to admit, like Abhishek said, that on two parameters, they are giving you a lot of reason to be happy. One, that there is no deterioration at all of asset quality when you look at the numbers per se. We may get some finer granular detail when the presentation is made, but on the face of it, this is an excellent GNPA number. Hardly any difference between last quarter. I mean, it's not a 100 crore increase. That's as good as like what, 1 or 2%. And this is coupled with a fairly significant growth of 23% in loan. This is significantly above the industry growth rate. The industry growth rate is still running at about 12-13%. Compared to that, Federal is going at 23%. That means it is taking market share from other banks. So no matter how you cut it, how you cut and slice it, it does look like it's a fairly decent growth. And if you're able to grow at this pace, the profitability will come. I mean, now, of course, you're going to provide for old loans. You have other legacy problems to sort out. Once they get sorted out, you are going to actually improve your profitability much more. And therefore, I think considering the way the stock was performing before the results came, this is definitely reason enough for a spring up.
Okay, just one more alert from the company. They have exercised the option of spreading the M2M losses or the mark-to-market losses over 4 quarters. So currently, the unamortized M2M loss stands at 44.2 crore rupees, which has been carried forward by the bank, which will be spread in the remaining quarters.
Okay,
so
that's a minor negative.
It's 44 crores.
11 crore per quarter, or about 15 crore per quarter for
in
the
next 3 quarters.
Yeah.
So that would be the increase, 44.2 crore rupees, which has been carried forward by the bank, which will be spread in the remaining quarters.
Okay,
so
that's a minor negative.
It's 44 crores.
11 crore per quarter, or about 15 crore per quarter for
in
the
next 3 quarters.
Yeah.
So that would be the increase in provision as things stand as of now. But I guess that's easily taken in the stride by the bank right now.
I'll take your point, the mark-to-market losses. Despite the fact that their other income is down about 18% YOY and about 14% sequentially, they have reported net profits far higher than our poll. So the fact is that there is underlying strength. You look at the operating profit growth, despite other income lagging behind, the cost-to-income ratio has remained stable for the bank. And overall, the cost-to-income ratio is at 51.8. That compares to 52.8 in the previous quarter. So despite no other income help, they have curtailed their OPEX. This performance is really good on all parameters that we can see right now in the P&L. We need to wait for, the slippages details.
I'm just looking whether there are any details on the provision coverage ratio. I can't see it just yet. But that's something they normally declare in the notes to accounts. I can't find it now. But
last quarter it was at 65%.
Yeah, so that's exactly what I'm trying to find, a comparable number. But
even I couldn't
case,
find it in the even I couldn't find it in the P&L.
Yeah, and also it's a very difficult print. I wish there are some Reserve Bank or listing rules in terms of font size also. So it's easily read. But yeah, okay, just stick with what Abhishek has said, that asset quality is not an issue. And growth has come. Whether you look at NII, for instance, in DCB, you had loan growth, but it didn't translate into NII. Yes. Here you have a net interest income growth as well as a balance sheet growth or a loan growth. So it looks like they have not done it at the expense of margins. It appears that they've maintained the margins, and therefore it's at the moment all guns blazing. We will wait for Shyam Srinivasan to speak with us at 2:45.
Okay, all right. Thanks so much for that, Latha, as well as Abhishek. Well, that's given. It's a good set of numbers as with the details that we have right now. But keep an eye out on the markets as well. Crude prices, if you can get Brent crude intraday chart, should come up for you. And then we should pull up. So let's pull up Brent crude prices, the intraday chart. That's moved to the low point of the day. And take a look at the big run we are seeing on some of these oil marketing companies. The likes of HPCL, you have BPCL, as well as IOC. They're up between around 3 to around 6% now. HPCL is up nearly around 6% as we speak. So keep an eye out on a couple of these stocks. On the flip side, though, you have something like a Dr. Reddy's that's come in for selling. Remember, yesterday it was down more than 8%. Today as well, we're seeing some follow-through selling on that one. And Hindustan Unilever trading at around 50 to 52 times. The margin for disappointment is very, very small. And that stock as well is down 3.5%. Biggest loser on the Nifty. We'll slip into a short break on that note. You come back, we'll focus on the markets as well as on various stocks.
Welcome back, and the big story of the day clearly has been the crude oil prices and the kind of slide that we have seen onto that one, 4% overnight, and this is after 4% decline in the previous week as well. And while we did see Asia begin on a positive note, that really seems to be turning around in Europe right now. And there have been, of course, various fundamentals to talk about, and let's get on Jonathan Bharat to exactly get that going. Jonathan, hi, good to have you. It has been about Libya and, of course, the US softening its stance on Iran about sanctions, etc. Is that what you think is the major reason for the crude oil prices coming down, or are the markets really looking at weaker demand expectations as well?
Yeah, good afternoon. I think it's a lot of them, and plus it's a very long market. A lot of traders have been long expecting the supply issues to continue to crunch and prices to trade higher. But I guess when you look at the stance that the EU has on Iran, also the potential for strategic petroleum reserves to be let onto the market, which is another thing that Trump said, you get this criteria that suggests, well, if you're long, you're wrong, so let's get out of the market.
Right. So clearly it has been a lot of money managers, hedge funds liquidating their long positions there. But would you say all of that now has been factored in, or are we looking at some more decline continuing for crude?
Well, I think at the end of the day, depending on how it plays out, it could be a bear trap for some players. We still have a supply crunch, which is still there. If Saudi Arabia can't actually deliver what it said it would deliver in Russia, and you still have that demand, which is clearly there, then you'll see prices start to retract to the top side. But I think I think Trump has done very well to get prices off these highs. The question is whether or not the supply issues that we've had in the past, whether or not the waivers for the Iranian buyers of oil stay in play, then time will only tell. But at the moment, she's under pressure and the market's readjusting.
The other thing clearly is the political will to try and control prices and keep it under pressure. It's not just the US which is trying to do that. A lot of consumer countries, especially India, has been quite vocal about this as well. How important or a bigger point is that one?
I think at the end of the day, everyone, when you are a consumer, and when you look at India, when you look at China, when you look at Japan, we're talking about the largest economies in the world, apart from the US. So it's very important that you get stability in input prices. And I think voicing that opinion, I think to the US administration as they try to play, the leader in all these negotiations, I think is quite interesting. But I think when India's got a point of view, India does buy oil from Iran. If they get that waiver from the US, then it's happy days for the economy. Nobody wants the economies to slow down due to high input prices.
Oh, absolutely. So what is your sense on where are we headed on the crude oil prices? I mean, you did say that there is a lot of uncertainty in the global markets, too many moving pieces of the puzzle. But even then, what is the range that you're looking at?
Well, I think when you look at it, we've had an 8% readjustment in prices. So I think the good thing is that creates a pretty tough resistance to the top side. So I think we do have that top in place, and I would like to see prices level off. I'd like to see prices. I'd like to understand more about those geopolitical issues that we have. But I think prices should steady off. I think they still have this gravity towards the top side, but I don't yet see them breaking through to new highs.
What also is your sense about the OPEC and the allies? Because they also had decided to increase supplies in the month of July. Do you see that supplies also coming into the market? Because if that happens, then we clearly are looking at increasing supplies from here on.
Well, yes, absolutely. And I think, do we get to that stage where, OPEC obviously put in the supply constraints because of a glut? I don't think so yet. I think when you look at the consumption, particularly out of OPEC, and you look at Saudi Arabia, they're producing at record levels, and it's being consumed. We're seeing inventory draws in the States continue. So whilst we see this pressure, I think it's a welcoming sight to see more crude oil come onto the market. And I think seeing that at the moment will level the price, and that's what it's doing.
Okay, all right. Thanks so much for that, Jonathan, as well as Manisha. Well, keep an eye on the markets as well. Equity markets, we're virtually at the high point of the day. On that note, I think we'll slip into a short break. You come back, we'll get you more on the markets.
Welcome back. By the way, keep your eye on Z Entertainment. Also comes out with numbers today, and the stock is surging ahead of that, now higher by close to about 2.2%. But some more details emerging on Federal Bank. Abhishek, a sharp decline in their slippages on a quarter-on-quarter basis.
Well, Rima, to begin with, the gross slippages are at 461 crores. That compares to about 872 crore in the previous quarter. But you look at the breakup of the slippages. The corporate slippages are at 207 crore. That compares to about 600 plus crore in the previous quarter. So the decline in slippages is largely due to the corporate portfolio, wherein the slippages have declined to 1/3 of what they were in the previous quarter. The net interest margin has also been maintained at 3.12%, and that compares to about 3.11% in the previous quarter. You look at IndusInd Bank results or DCB Bank's results, the net interest margin has taken a sharp knock quarter on quarter. Unlike the peers, for Federal Bank, the net interest margin has slightly improved by 1 basis point to about 3.12%. As I said, back of the envelope calculation, the loan growth would be between 22 to 23%. The loan growth is at 24%. So overall, strong set of numbers coming in from Federal Bank.
Yes, absolutely. And some more details. The recoveries and upgrades at 246 crore are the highest that we've seen, at least in the recent past. The stock continues to run ahead, now higher by 12.5%. Thanks, Abhishek, for that. With that, it's a wrap on Halftime Report. Stay tuned. Business Lunch will take the market action forward.